Hey everyone, in this video I'm going to highlight one dividend stock that's down 51% off its highs that I think you might regret if you don't buy it at these valuations. But before I reveal what this dividend stock is, I'm going to highlight a few of its financial metrics, discuss why I like it so much, and then towards the end of the video I will reveal the dividend stock. Let's get started with its dividend yield. Of course, if you're looking at a dividend stock to buy, one of the things you're likely most interested in is the dividend yield, and this stock boasts a very strong 5.82% dividend yield, one of the best dividend yields in the market for sustainably strong dividends in the stock market today. So I really like a dividend yield around this range. um, Anything higher than 6% right now seems to be coming from companies that have unsustainable dividend yields, meaning they are likely to pause or cancel their dividend yield. But 6% to 4% seems to be like a sweet spot for companies that have sustainable dividend yields right now, although you need to get more specific into the details to see if the company does indeed have a sustainable dividend yield. And this one appears to be that way, appears to be sustainable, because look at this company's revenue over the trailing 12-month period. What you notice here is two things. Number one, a huge crash in 2020. Obviously, what was the big thing that happened in 2020? The pandemic, and this company was not a beneficiary from that. And you can see that as economies reopened, it experienced a boom in recovery from revenue as economies have reopened back up to 20.94 billion, I should say. And there's room to go for this company to recover where it was before the outbreak. It may not do so. It may not get all of its revenue back, but it's got room to go, and it's already had a nice recovery from the lows where it crashed near 16 billion in revenue. So two things to highlight is one, it was hurt significantly from the pandemic, and two, it's recovering strongly as economies reopen. One of the areas it's got exposure to is to the restaurant industry, and from what I've looked at, from what I've seen in all macroeconomic metrics, is consumers are spending a lot more money going out to eat and eating at restaurants. So that's a good indicator for this company's near-term prospects. And another thing that I like for this company is a recovery in its operating profit margin. It used to have an operating profit margin in the double digits that was growing nicely before the outbreak devastated the business, but it looks like it's bottomed out and is recovering. You've got the operating profit margin that was as low as 7%, now going back up to 8.2%. There's room for the company to continue recovering this operating profit margin as revenue continues to rebound, as it makes improvements in costs, and as the rising rates of inflation kind of ease and ease up a little bit because the Federal Reserve has raised interest rates significantly. The final thing I'll talk about why I like this dividend stock is the valuation. You look at its forward price to earnings ratio, which I have pulled up here. This stock has arguably not been cheaper going back several years, going back to at least early 2022. It's trading at a forward PE of 12.58, which is less expensive than the average stock in the S&P 500 by a considerable margin. So you've got a very strong dividend yield. You've got a company that's recovering as economies reopen, so it's on the positive side of momentum. You've got a company that's building up its operating profit margin, and all of those things you're getting at a inexpensive valuation. For those reasons, I think you might regret not buying this dividend stock here. So what is the dividend stock? It is International Paper, ticker symbol IP. I think you might regret missing out on this excellent dividend stock right now. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.